We have been flooded with information about AI investments, and the stock prices in those companies have been on fire the past 2 years. But if you go out and ask your neighbor, hey, how do you use AI? And they probably just generate a few pictures, or maybe they use ChatGPT to do some of their writing. But nothing groundbreaking. For the average person, it's been more of a novelty than it is practical for everyday use. Granted, you may not be average, but for the everyday person, AI has been a lot of talk and not a lot of substance. But that is going to quickly change, and I'll get to that in just a second. First, in this video, I'm going to highlight what I'm buying this month for my portfolio and what weight I'm giving for each of them. In addition, I'm going to give some of you information, not advice, that can make you some extra money within your investments. For reference, I give myself a paycheck once a month, where some of my funds go directly to an IRA account, nothing is purchased, and then I also take some extra to invest separately. I never have any of these accounts set to buy when the funds are transferred over. Some of you may have some money going to an IRA where it buys it for you when it's received. And if you have a choice, like me, I would not do that, because what if your funds get to your account and it automatically buys at 2 p.m. on a Thursday? And that just happens to be the high of the week on that particular stock or the fund. And then, of course, the next day it drops negative 5%. The market is a living beast that breathes in and out every single hour of the workday. Instead, I'll just sit on my funds for a day or two, and then I'm going to buy when there's a big drop for that particular day of the week. Once again, this is not advice, but more often than not, this extra hand-holding does happen to give me a little extra in my returns in the immediate short term. Let's get started with our first company of Google, which is an obvious choice for investing this month. Given what Google showcased last week in their I/O event, we are going to see just how powerful AI will truly become for our everyday lives. This new phase aims to bring their best models into your hands and our products ASAP, making decades of research reality for people all over the world. Central to all of this is Gemini 2.5 Pro, their most intelligent model ever, capable of coding a web app from a sketch, offering native audio, and acting as the leading model for learning within their Learn LM. I'm not making this up, but I used Gemini a week ago, and it saved me from a $25,000 mistake. And I know that sounds absolutely ridiculous, but we are in the process of selling our house, and we had an offer, then we had a counter offer that we accepted. Before signing the documents from the realtor, I put all of these into Gemini and I asked it, hey, can you find any errors or items of concerns? Instantly, it found a box that the realtor didn't check to accept the amended counter offer. Now, if that box was left unchecked, we would have lost $25,000. So I keep preaching to all my friends how they need to leverage AI more often for things like this. Please let me know in the comments if you have used AI for something like this where it saved you a lot of money. Like, I genuinely want more inspiration for where I need to use it more often. Now, in getting back to Google, they are transforming the Gemini app into a universal AI assistant. It gains enhanced voice, memory, and computer control. Gemini Live allows sharing your camera and screen for real-time interaction. Like when I can't figure out a feature in Photoshop, Gemini literally tells me what I need to do while I'm sharing my screen. This is like having tech support for every item that you have within your fingertips. Finally, I can get away from being tech support for my father-in-law. Totally joking. The new agent mode aims to handle multi-step tasks behind the scenes, all rolling out free within their mobile, and honestly, I can't wait to test this out. Perhaps the biggest impact comes from the all-new AI mode in Google Search, a total reimagining of search. Of course, it's powered by the same Gemini 2.5 models, and it handles longer, complex queries. And then there's agentic capabilities, meaning it can take work off of our plates, like skipping steps to check out tickets. Search can even see what you see using your camera for real-time help, similar to what I mentioned before. The goal is to move search beyond information and over to intelligence. Looking ahead, Android XR for glasses hints at AI layered into reality, letting you ask Gemini about what you see. These announcements signal a clear move from AI as a novelty to being an integrated, practical part of our daily life. So when you bring all of this together, it seems like Google is light years ahead of all the other tech companies. Google's Assistant is going to tear into Amazon's Alexa share. That and Google's devices don't feed you ads like Alexa does non-stop. Seriously, do all of those ads bother anyone else as much as it does me? And for reference, I did work at Amazon where I had beta tested most all of these Alexa devices, so I feel like I have every reason to be critical of these stupid ads. Before moving on, if you get any value from my research, my spreadsheets, and all of my insights from this channel, please do me a favor, give me a like so that my channel can continue to get a little love and grow. An area that a lot of viewers have commented about being one of their favorite investments during all of this tariff talk happens to be gold, and how it's up over 28% year to date. That brings us to our sponsor for today, AxeCap Ventures, who invests in gold mining, where their key asset is the Converse project, located in Nevada's Battle Mountain Trend, a top-tier gold jurisdiction producing 75% of the US's gold. And they're already sitting on 5.57 million ounces of measured and indicated gold. So if you do some simple math over 5 million ounces of indicated gold, along with their $10 million in cash holdings, it's worth way more than AxeCap's market cap of $52 million, meaning that AxeCap Venture is trading at around $5 to $6 per ounce based on their finding and their market cap. That is a massive discount to its peers who are trading at 700% more at around $40 to $60 an ounce. And another strong indicator is insiders have been buying stock in recent weeks at over $1.2 million in purchased stock in just the last quarter, of course, signaling strong confidence. If you want to learn more about AxeCap Ventures, then please check out the link below. My next company falls into my mega growth category of my portfolio, and that's D-Wave, which is one of the top pure play quantum computing companies, where it happened to be up over 46% just last week. The reason it went up is because they announced a general availability of its 6th generation Advantage 2 annealing quantum computer. I think that I am one of the few people that has really showcased quantum computing stocks as the next big growth engine, and it has so much potential. And I am so thankful that I invested in them a while back, because all of those quantum investments are up hundreds, if not thousands of percent in just the past year. And if you get my free newsletter, then you get access to my portfolio and you can see where I'm putting my money. In addition, D-Wave had shocked investors a couple weeks ago with their Q1 revenue of $15 million. That was up 509%. Granted, they are still not profitable, but with bookings filling up and the fact that they are proving that quantum computing isn't just theory, but can be used in practical terms, then the stock has a lot of room to climb. And think about who their clients are going to be. It's going to be every high-paying customer that wants to get a massive leap on their competition, and they're going to want access to these quantum computers. That means that their margins and their bookings are going to quickly become a very steady data point for all of us investors. Now, you may have noticed that Apple didn't make my list, and in my opinion, it's going to be a while before it does. And rather than me getting into all of those details, I'll simply point you to this video right over here that I did a week or two ago where I did list out all of my rankings for the Meg 7 and why Apple is going to have a tough year or two before I really get back into them. My next company is Archer Aviation, which I have highlighted in a few other videos where it's given my portfolio a really nice boost considering it's not even generating any revenue as a company. And if you're not familiar, they are an eVTOL company, which stands for Electric Vertical Takeoff and Landing, and their Midnight aircraft looks as cool as it sounds. They're trying to get commercial flights going by the end of this year, but I think 2026 is more realistic. They were recently named the official air taxi for the 2028 LA Olympics, which is going to give the company a ton of publicity. It sort of reminds me of when the LA Olympics had that jetpack back in 1984. And as a young kid at the time, I was mesmerized by that. In addition, Archer is partnering with Palantir and Anduril, giving them a lot of credible momentum. Plus, they gave investors a surprise with their Q1 report where earnings per share loss came in way below analyst forecasts, and their cash reserves swelled well above $1 billion. So they have plenty of funding to get their product to production and take off. Literally.
How cool is this?
Our next company is nvidia, and the earnings report just came out last week, and the results beat expectations with an increase in revenue of over 69%, despite all of the chip restrictions. The stock has already shown a little growth since the earnings call, and it has plenty of room for growth since they continue to have all of their capacity booked out for the year. They are a win-win for me no matter what over the next 5 years. As a quick reminder, data center GPU share is expected to have an average annual growth rate of over 28% a year for the next 5 years. And of that, nvidia has over 90% of the total GPU data center share. No surprise, they dominate the space because of their CUDA software and the hardware innovations really creating a wedge from their competitors. Granted, they did have some pushback with the US export restrictions to China. Despite that, they are still fully booked out for the next year on their Blackwell chips. But a nice boost for the company is the commitments from the Middle Eastern countries to boost their AI infrastructures for these sovereign nations. And it's estimated to be worth over an extra $50 billion. There should be no doubt about the data center growth, where nvidia continues to be that AI engine that's driving this huge ship around. I'll keep investing with them so long as they are in the driver's seat. The next company is Oklo, which designs and builds compact advanced fission reactors, what they call microreactors, to deliver carbon-free power and medical isotopes. Their Aurora series uses proprietary fast neutron technology for safer, lower cost, and faster deployed nuclear energy. Literally, a day after I wrote down all of my notes for this video, Trump announced his executive order to speed up nuclear reactor buildouts, which caused Oklo and all the other nuclear stocks to pop way up. I had thought about taking it off of my list now that it had bumped up, but I really stand behind it. If there's a dip coming up, I'm going to buy in more because they have a solid trajectory. And as reference, a couple weeks back, they did hit a drilling milestone after finalizing a DOE and INL agreements in Idaho, and they are looking to expand to other sites. The biggest drawback on nuclear energy and stocks is all the government permitting and those requirements. But if this new executive order is relaxing on those permits, then nuclear has a lot of runway. And if you are curious about all those other players within nuclear stocks, I do cover it extensively in this video right here. You may notice I'm not going to showcase Amazon because I already have a ton of stock as a former employee. But even if I wasn't, I would not be buying into Amazon this particular month because I expect those tariffs to really increase all the product costs, and that's going to hurt their retail sales at least over the summer. I see them with a much better buying opportunity later in the fall. Now, another stock that I am buying into is Microsoft, where they had their Build keynote last week, where AI agents were the focus throughout. They want to expand their offering from GitHub and infuse them into all the other ecosystem within Azure, Windows, and 365 products to truly allow anyone to delegate tasks. Boiling it down, it's apparent that Microsoft is really driving hard to scale AI from edge to cloud, ensuring that they can hit every customer type to really democratize AI agents. The downside to Microsoft is that they are a bit too bureaucratic and they build product for such a broad use that they often make really good product, but they never have a great product.
Does that make sense?
Good products work for the masses, and that's what they are truly banking on. However, all of this change in focus does come at a cost, where they had to lay off about 3% of their workforce to shift priorities to more AI-aligned objectives. This is actually a very common trend that we're going to continue to see and hear about across a lot of other companies over the next couple of years. Balancing it all out, Microsoft has healthy margins, and their fundamentals are strong where their capex and their debt to ratio is getting more in line and trending down. As we'd expect, there is nothing but solid fundamentals for Microsoft. So for my monthly budget for what I'm investing in, for my needs, I put most of my weight into the mega cap companies because they have less variability in the growth sector because they have deep pockets and they have very strong financials. So I'm investing primarily about 50% to nvidia, 20% to Microsoft, 20% to Google, and roughly 5% is going to Oklo and another 5% to Archer. I try to invest just small amounts into the more speculative stocks, but I do try to keep feeding the ones that I believe have the strongest chances of having huge returns over the long term. I just transition these each month based on the stock price and whether it's a value or not. Obviously, it's always changing based on the market. As always, thank you so much for watching.